At the end of the day, trading really comes down to these 5 things: identifying your bias, your lower time frame draw on liquidity. 3.1 is a secret I'm going to teach you later on in the video. Number 4 is your entry model. And number 5 is your risk management. I use this exact same framework to trade live every single week in my Discord server in front of hundreds of students. I've had 90% win rate using this model. This model is not a mechanical way to trade, but I promise you by the end of this video, you will understand everything and you will learn to trade this model. Now, we are going to take our entries on the 1 minute time frame, but we're going to identify our bias first, because without bias, this framework, this model is not going to work. But don't worry, there are ways to identify bias. There are multiple ways, and I'm going to teach you all of that in this video. Before we do that, please hit the subscribe button, hit the like button. I would really appreciate it, right? I'm putting out all this information for free, so at least I deserve a subscribe. Or you can just watch this video, go back test after the video is over, and if it works for you, then come back and subscribe. It's really up to you. Now, how do you basically, so what exactly is the model, right? Let's talk about that. So we need to learn this front thing. We're going to be trading on the 1 minute time frame. We're going to take our entries on the 1 minute time frame, right? But before you do that, we need to understand that before 9:30 a.m. New York time, price will engineer equal highs or equal lows. So price will either engineer equal lows right before 9:30 open, right? Not right before, but before 9:30, any time of the day, right? So before 9:30, you're gonna either see the equal lows, or price will engineer equal highs, right? That is price, already producing the destination for the price after 9:30. I hope that makes sense, right? So you're gonna have equal highs or equal lows. Now that's what price does every single day. Now there will be exceptions where price doesn't do it, and that's totally fine. You have to avoid that because, as I said before, I trade every single week, not every day. So every day is not a trading day. So you need to understand that once you have this concept. Now let's move on to the bias first, right? So we want to identify our bias. So this is very important. So in my previous videos, I have taught you can use external to internal liquidity method. So let's assume that on the daily time frame, right, price takes out the external range liquidity or a major high, and then you have a fair value gap in the discount, right? This could be your draw on liquidity. Price only does 2 things. It goes from external range liquidity to internal range liquidity, or from internal to external. So let's suppose that price has taken out this on the daily time frame. Now, what you could do is then look for another further confirmation and look for a 1 hour market structure shift. Now, and then you can basically, your bias is going to be towards this fair value gap. Now, it could be on the 1 minute, the 5 minute, doesn't really matter. But since we're going to be trading on the 1 minute time frame, that's what we're going to utilize. After we get a 1 hour market structure shift, right, then our bias switches to being bearish. Now there's another way, and that you simply look at the equal highs and equal lows. Now what I do is I choose the highest time frame first. I identify what's happening on that higher time frame, right? So for example, first off, I will open up the daily time frame and I'll see if there are any equal highs and equal lows. So what I'm going to do is I'm going to look for what is price doing. So if I see that price in the past has already swept equal highs, but then we have these equal lows resting around this level, then my bias is automatically going to switch to being bearish, because when price sweeps the range high, the equal highs over here, the next target for price 90 or 80% of the time is going to be these equal lows, right? Because market needs liquidity to move. This is a very basic concept. So this is another way to identify your bias. Now, if I don't see this on the daily time frame, right, what I would do is I would drop down to 4 hour time frame, and then on the 4 hour time frame, I would look for this. So if we have swept equal highs or equal lows, so for instance, let's imagine that on the 4 hour time frame, price has swept equal highs, then of course my bias is going to be towards these equal lows that are present on the 4 hour time frame. And let's suppose that there's no equal highs or equal lows on the 4 hour, then I will drop down to 1 hour time frame, right? On the 1 hour, I will look for the same thing. If there are equal highs that are swept or equal lows that are swept, then my next target would be the equal highs or equal lows, right? Very simple stuff. And the last and the least time frame that I would go on is on the 15-minute time frame, right? So on the 15-minute time frame, mostly you're gonna find equal highs and equal lows. There's a chance that you will also find very clean equal highs and equal lows before the 9:30 open on the 15-minute time frame, right? Now, I know this is a lot to consume, but this really comes down to your experience. If you're an experienced trader, you will understand what I'm teaching you right now. So bias is very simple. There are a bunch of videos that I've made on bias. You can watch them. The best mechanical method to identify bias is the external to internal range liquidity method. It's very simple, and you can basically identify the bias with that. Now, you can use the exact same external to internal liquidity method on the 1 hour time frame as well, right? Because we are trading on the 1 minute time frame, so you don't really need to go to the daily time frame to look for that pattern. All you got to do is just look at this pattern. So basically, if price sweeps external range liquidity on the 1 hour time frame, and there is a fair value gap in the discount over here, and you get a 5-minute market structure shift, right? Like that. So now your bias is going to be bearish towards this fair value gap. Now let's talk about the lower time frame draw on liquidity, right? So what we want to see is when we have a 5-minute market structure shift, right? Price before the 9:30 open will and may engineer liquidity, right? So what we were going to have is something like this, a pattern something like this that looks like that exactly. So we're going to have equal lows here, and let's assume that let me just mark this out like that. Okay, perfect. So this is the 9:30 open, right? So we want to be trading after the 9:30 open, and this is going to be the number 3 method, is looking for a liquidity sweep in the opposite direction of your bias. So our bias is bearish, so what we want to do is we want to look for sweep of buy side liquidity first in order to take our entry on the 1 minute time frame. So remember, we are on the 5-minute time frame, right? At this moment, at this very exact moment, and 9:30 open is here. So what I do is I mark out equal highs over here. So what I'm expecting for price to do is first sweep out the buy side liquidity, and then let's talk about the entry model. So what I do is I look for inverse fair value gap, and I take my entry and I target the equal lows over here. Now there are rules to finding a perfect inverse fair value gap. All right, so what exactly is inverse fair value gap? Let's talk about that in a very quick way. So when you have a fair value gap, so let's assume that there is a fair value gap just around here, right? And let's suppose that there are multiple fair value gaps here. So there's one here as well, and there's one here as well. Now when price rejects the fair value gap, so it invalidates the fair value gap, it closes below the fair value gap, then this fair value gap becomes inversed. Hence, it is called inverse fair value gap. But my entry model requires the price to inverse all of the fair value gaps, all of the fair value gaps in order for me to take the entry. If there are multiple fair value gaps in this leg from this low to this high, right? So from this low to this high, I want to see all of the fair value gaps get inversed on the 1 minute time frame. Right? I'm going to show you guys a bunch of examples in this video, so you don't have to worry about anything. If it sounds confusing to you, then don't worry, because this is the live trading model. I use this model every single week in my Discord server, and I promise you, with a little bit of practice, you will master this. All you have to understand that we need 5 things to make money from these markets. All right, we need to identify the bias, the lower time frame draw on liquidity. The number 3 is the opposite bias, opposite liquidity sweep, which is buy side liquidity in this case. Then we look for entry model, which is the inverse fair value gap model. Now once these fair value gaps get inversed, right, we can simply take our entry on the closure or on the retest. Right, so this could be your entry, and let's suppose that these are the equal lows. That is our draw on liquidity. That is going to be hit in no time. Now let's assume that there is only one fair value gap in this leg, and that is even better. When price closes below it, that is my entry market right away. I'm not looking for sell limit orders. I'm entering sell market. Or if price has gone way far down, then I would look for a sell limit order, because I want to get a better risk to reward ratio. Now, here is another tip that I can give you, and this is not my model. This exact entry model is not mine, right? There are people on YouTube that have taught this before. So, for example, there's one guy, Dodgy, and there's ICT as well. So, what I want to look for is if before my entry, the closest liquidity level is swept, then that's probabilities of that setup becomes a low, right? So let's assume that price sweeps some form of liquidity before our entry, even though our drawn liquidity is here, right? We cannot trust price to always come to us this drawn liquidity because markets are unpredictable. We are just, doing what we think is right. And of course, in the long run, what we are doing is actually right. But sometimes markets have some other business to do. So when you get an inverse fair value gap, after we have swept the opposite liquidity, right? And then we look for an inverse fair value gap that gets inversed, but we don't get an entry, right? And price goes up ahead and sweeps the closest liquidity level, which could be this low over here, right? Then the setup becomes invalid in my eyes. And I want to look for another buy side liquidity sweep and look for this exact same pattern. Now, another thing that you need to keep in mind is, let's assume that we inverse this fair value gap and we take our entry. When price reaches the closest liquidity level, we're going to go break even right there. Okay, we don't want to hold risk, even though our drawn liquidity is here. When the closest low is taken out after our entry, we go break even. Very simple stuff. Now, at 1-to-1, so let's talk about the risk management, right? All right, so let's talk about risk management. We are going to go break even at 1-to-1 risk to reward ratio, and we are going to take a partial of 40%. So we're going to take off 40% of our position at 1-to-1 risk to reward ratio. And then we can hold the trade until the 5-minute equal lows that I've marked out get taken out. Very simple stuff. All right, identifying bias, lower time from draw on liquidity, which is this. Entry model, sweep of the opposite side liquidity, which is buy side over here. Entry model is this, right? Entry here, boom, boom, boom. Very simple stuff. I'm going to give you guys some examples and that will clear each and everything. All right, so here is example one. It's very simple stuff, right? So this is NQ, and I trade NQ only when I'm trading live. So over here, you can see we had this low over here, and before 9:30 open, I saw that price has swept this low over here, and we also had these relative equal lows around this area, right? So when I saw this, I knew that price has taken out sell side liquidity. So what's going to be the next destination for the price? Some sort of equal highs, right? Very simple stuff. So over here, you can see that we have relative equal highs over here, and that is the Asia session high as well. And then we have the larger liquidity, which is this around here. And you're going to see that it will be taken out. But I want to show you how I would have approached this market, right? Because right now, identifying a bias at this level is hard, but I'm teaching you right now. I just look at the equal highs and equal lows. And when I saw the equal lows were taken out, the next target is obviously the equal highs. Now, what I did is I went to the 1-minute time frame. And first thing first, what I see here is price has swept the equal lows that were presented here. Now, the strategy is that we trade after 9:30, right? So we simply cannot trade before 9:30. So right here, after 9:30, we are looking for 1-minute opposite liquidity sweep. Because right now, if you see here, we have these equal highs, right? And then we have these equal highs, right? And then we have the highest level of equal highs, which are present, somewhere around here. So it really comes down to identifying equal highs and equal lows. Price only moves towards these levels. So right here, what you can see, how I've entered this market is I'm looking for opposite side liquidity sweep. So right here, you can see we have lower low, lower high, and then a lower low. That is price sweeping this low and tapping into this bullish fair value gap. Now, what I'm looking for is some form of confirmation entry here, right? So I want to wait for price to give me a very solid entry that I can take on my account. So right here, what you can see is I have this level, right? This inverse fair value gap. So after we sweep this low and we tap into this, we form an inverse fair value gap, a single inverse fair value gap. Price closes above it, right? That would be my entry. Stop below the low, right? And then we have the closest liquidity level here, and that's where you are supposed to go break even, right? And at 1-to-1, you are supposed to take 40% of your position And then you can basically target the higher time frame draw, which is around this level. So right now you can see that how price goes towards that higher time frame draw on liquidity. So price keeps going up and up and up. And right there we have our take profit level hit. Now there was another setup that you could have taken. So we sweep these equal lows over here, right? We then form these inverse fair value gaps right here. Price closes above that, that is your entry, or on the retest, and then you could have held towards this level. Very simple stuff. That's how you basically trade with discretion. Now, of course, this is going to require some experience, but as I said before, you are only looking at equal highs, equal lows in inverse fair value gaps. And of course, the opposite side liquidity sweep. So let's assume that you have buy side liquidity as your draw. You're looking for sell side liquidity sweep, inverse fair value gap, and then you're taking your entry towards these equal highs. Let me give you guys a couple of more examples. All right, guys, here is another example. So I started off on the 1 hour time frame. I saw that the sell side has been taken out on the 1 hour time frame. And then we had a displacement to the upside, right? And then we left these equal highs resting around this level, right? And then we had a sell side liquidity sweep. So I'm going to go to the 1 minute time frame. I'm going to show you how it looks like. So right here, what you can see is, if I zoom out a bit, we swept that 1 hour liquidity, right? But we want to trade after the 9:30. So right now, what we had these equal lows over here. And these get swept before 9:30, right? And before 9:30 over here, what you can see is we form equal highs. So this high right here, and a bunch of liquidity around this level. Now, price goes down, right? It engineers liquidity once again, and then sweeps it. So this is a opposite side liquidity sweep that we want to look for. Now we have a bunch of areas that we can target. So our highest target would be these Asia highs right here. Very clean stuff. That's what you want to see. You cannot force yourself to see the equal highs and lows. They will be there. If they are there, you will be able to see them. All right. You don't have to force into looking for them. So right here, when we get a sweep here, we have equal highs. That is our draw on liquidity, right? We have our buys framed very simply by looking at the 1 hour time frame. We swept the low, right? So very simple stuff. Now, right here, what we have is a fair value gap that gets inversed. So that would be your entry long right there, right? So our first target is, of course, 1-to-1 over here. And then, of course, the highest target would be somewhere around here, right? That is your Asia highs that are resting around this level. So what I did, I looked at the higher time frame first, usually the 1 hour time frame. But if there's nothing present on the 1 hour, I go onto the daily time frame and I try to work from there, right? And I usually start from daily, but I usually start nowadays on the 1 hour, because most of the time you will not require daily time frame since we are trading on the 1 minute, as I said before. So very clean entry here. You can see how price moves towards these equal highs. That is a magnet for price. Price will seek the highs that are, because they are engineered for a reason, right? Very simple stuff. Of course, this is going to require some practice. I'm going to give you guys one more example, and then the next thing that you have to do is go back to the charts and practice and practice and practice and watch this video again and again. All right, so here's the last example. So what I see here is that we have this low over here, right? This one was shown in the last example, but this is going to be a bearish example over here. So we have this low, and price is just coming down and down and down and down and down. It has already violated this fair value gap right here. So that tells me the next target for price is either this low, or this low over here. This low is most probable because, below that there is a remaining fair value gap, or inefficiency, as you would say, or ICT would say, right? And price has to fill that level out. So very easy way to identify the bias. Now at 9, so let's go at 9 right here. We have a sharp drop to the downside, and that's giving me more confidence that price wants to go towards these lows over here, right? Very simple stuff. So now what I do is I go to the 1 minute time frame. Very simple stuff. And let's just go back to 9:30 open here. What I'm waiting for is price to give me a opposite liquidity sweep, right? So I'm going to wait for price to give that. And just right here, where you can see we engineered buy side, we had a sweep in the opposite direction of the draw on liquidity that we have marked out right here, right? And what do you see here? One fair value gap. And we want to see this inversed. If there were multiple fair value gaps, I would like to see all of them get inversed, and then I would take my entry, right? So what happens next? Price burst through this fair value gap. That is your short entry. Stop goes right there. This could be your target level. And you will see how price moves towards these lows around this level. And you can see that price will keep on dropping and dropping and dropping because price has unfinished business down there. So take some time, and during just before the PM session, price hits that, giving you in total 6 risk reward. So that would be it, guys. I really hope you guys learned something from this video. Please go and practice a lot. If you're looking for very high win rate crypto signals, so I know a lot of people trade crypto here, and if you're looking for signals, there's a link in the description. 80-90% win rate signals. You're not gonna regret them. Trust me on this. I'll see you guys on the next one. Goodbye.